The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. If you miss an episode, you can always catch me online at themainstreetcode.com. Catch me on Spotify or Apple if you're driving around and you got nothing else to do. I hope that we can entertain you with a good show. And best way to reach me, 631-647-4694. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors, insurance advisors, attorneys, CPAs every day, as well as many, many clients in their insurance needs. And we specialize in life insurance, long-term care, annuities, disability, and life settlements. We do quite a bit of all these things, and we get questions and things all the time. Today, I want to begin the show just by 3 phone calls I got yesterday that people called me up, and, I could talk about topics come up every single day that people don't realize and understand, and which is why they call me. So, let's see. 1, 2, 3, 4 different clients from 2 different attorneys. Okay, first client calls. Actually, his father called me, and his son consequently called me, that the son has been denied for life insurance in the past. He's 40 years old now. He has 2 children. He has a big need to insure his house and protection for his family. He has none. And the reason they called me is he was declined in the past because he had depression, but he's under medication. It's not an issue. And he's got some other, high blood pressure, diabetes, high blood pressure, cholesterol, nothing. No big thing. I said, but he now recently applied. He called these 1-800 online companies, Select a Quote, one of these, you hear him advertise. And I think he did an electronic app. He's getting ready to be declined again. And he's going to be declined again. Because there are 2 ways of underwriting a life insurance policy and getting a policy issued today. There's what I call the traditional, and there's the electronic. People say I'm old school, being traditional. Most insurance companies and agents are pushing towards electronic, and I'm going to tell you the difference. Here's what happens when you do an electronic application. You call somebody on the phone, you say, I want to buy life insurance, and you go through it, and they say, how much, blah, blah, blah. They might ask you some medical questions. Okay, this is a good carrier. Here. They do the application on the phone electronically. Now, I can do that for you, okay? Just like they can do it for you. When it's submitted electronically, 2 things happen, okay? One is the insurance company takes total control. They may do a telephone interview, which may take 45 minutes to an hour of your time, asking you medical questions, asking you financial questions, blah, blah, blah. If they're also going to do a background check on you, now they can do script checks and medical checks, and if they find something that you didn't remember or didn't discover, They'll send a doctor out to see you or a medical examiner. They retain all the records. And if it's something a little off, they might just say, you know what, we're not going to spend the time or energy doing all this. We're just going to decline you. Now, here's what happens. This guy is going to be declined again. He was ready to take his medical on Saturday. I said, don't take your medical. I know he's going to be declined again without question. And I know I'm going to get him issued with no problem. Because this is the difference in what we do. And this is why he's going to be declined. He's taking medicine for depression medication. He's taking other medications. It may not sound like a lot, but $2 million of coverage is a lot of money for somebody to get. However, to an insurance company, they look at, what are they paying for that $2 million? Because it's term insurance. You maybe pay a couple $1,000s a year. To them, it's easier to decline it than to go through all the work to say, hey, maybe we'll give you an issue. They're not there to issue. They're there to make an assessment, and if you walk on water, they'll give you a policy when you do these electronic apps, and that's it. Besides, they're taking control. They're ordering the medical. They're ordering the doctor. That's how the electronic system works. And we have reps that do that with us. And if the people are perfectly healthy, it works great. You can probably get quicker issue and this and that, and the insurance company loves it. They don't have to spend all this money. They don't even use a real underwriter. What they do is they take all this electronic data, plug it into their AI machine, and say, okay, you're this. That's what they do. That's how that works. What I'm going to do for this client is do what we call traditional underwriting. Traditional underwriting, I'm going to do a paper app. Now, I may still do it online and get all the basic data and get all the information over the phone. He's not going to have a telephone interview. But what I'm going to do is submit a cover letter and say, listen, this is why he was declined 10 years ago, because he was depressed, because of this. He was a teenager. Now he's 40, 2 kids, different story. I'm going to tell his story to an underwriter who's going to look at it, not a machine. That's so important. You got to tell your story. It's like applying for college. They don't want to just see numbers. They want to see why you and not him. So important. This is traditional. They don't teach this anymore. Period. You have a rep that's new in the business or been there 10 years and he works for a career company. They tell you do everything electronic. They want volume. They don't want to work with the client. They don't care. Sorry. That's how they're brainwashed to sell. It's not how I do it. And not the way to do it. Because we get people the coverage they need and at a price they can afford, because we do the right thing. I call it not old school, traditional underwriting. So important. So we do a combination. We're starting to do some electronic, but I'm telling you the problems I have with electronic apps. And all the insurance companies are pushing for this. Why? It's a cost savings to them. Accept, reject. This is easy. I don't have to have as many underwriters anymore. I can use a Google machine to do this thing. Okay? That's the problem. You need, especially if you have health impairments or you have a large need for insurance, you need to have it handled differently. You need to have it handled so we control the medical records. And listen, when we see something in the medical records and one company doesn't like it, that doesn't mean another company will like it. Okay? I have a case right now that I talked about in another show. I've been working with this gentleman for 8 months, 74 years old, major health impairments. I can't tell you how many companies would decline him if I submitted to them. So there's a way of me doing in a trial. I sat with head underwriters with 10 different insurance companies. And then in the underwriting process, we found out he had a hit on his MIB. That's the Medical Information Bureau. It's like a credit check on you that said he had kidney cancer, and he does not have kidney cancer and never had kidney cancer. The underwriters did not believe me. We went back and found those records. We found the doctor. Who does that? I found the frickin' doctor who denied him ever saying that. He did put it in his frickin' records, okay? He did write a letter saying that was a mistake. We did get those records remediated. Now, I've been working with him for 8 months, and now I have 2 offers for him. I still have companies that won't look at him, but I have 2 companies that are going to give him a good offer. It's astounding. Doing the right thing for clients is what we do to get you what you're looking for. And that's very important. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. We were talking about electronic and traditional underwriting. Please give us a call if you have any problems with getting life insurance or long-term care or disability. These are the kind of things we do to help you be successful. And we're going to be right back after this commercial. If you want to get a hold of me, 631-647-4694. Thank you, and I look forward to hearing from you soon. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I hope you enjoy the show. Before the show, we were talking about traditional underwriting versus electronic underwriting. And the trend is electronic. But guess what? It's not necessarily faster or easier, or will you be able to get what you want? Everyone thinks it's faster. Everyone thinks it's easier. Maybe you don't have to see anybody. Everybody likes to do that. Oh, isn't this great? But when you get declined or you get rated and you shouldn't be, it hurts you. So this client we were just talking about, if he gets declined again after being declined before, it's much harder to go back to another company after getting 2 declinations. Every time you get a declination from a company, they put a code on your medical information bureau, which is just like your credit report. They put different codes. We have a situation right now where the rep took an electronic app on the gentleman, and he did a survivorship app for the gentleman and his wife for some advanced planning in Florida. The one was an electronic app, and the one was a traditional app. Curiously enough, I was just on the phone with this morning. When he did the electronic app, they noticed that his creatine levels were low or high or something, which has to do with your kidneys. And he's taking creatine pills because he's lifting weights or whatever. For whatever reason, he's doing one of these GNC products, and it upset his urine readings to the point where they were concerned. So they were going to give him, let's say, a standard rating. Well, the other company that looked at him also was upset about the urine readings, and they asked him to take 2 more. Actually, we suggested let him take at his expense 2 more samples of his urine at 2 different times and see if we come up with the same result. Well, we did this, and they came back perfect. We went to the company where it was electronically underwritten, went back and got it traditionally underwritten and got it in front of an underwriter, got some eyes on it, and he got preferred. So the cost savings there was he was going to be paying $18,000 a year for this policy. Instead, he's paying $10,000 a year for this policy because we went that extra mile right there. Now, the survivorship policy, the other insurance company, didn't like an EKG he had. So they're putting on his report that we're not going to give him a good offer, not because of the urine samples, because of an EKG. Now, the first company didn't see that, or that underwriter didn't think about that. That wasn't an issue. Now, that will be reported to the Medical Information Bureau that he has a heart issue, and the other one could have reported that he had a kidney issue. Now, let's say he didn't take either policy, or he did, and he went and applied somewhere else. Well, guess what? You got 2 issues against you before you start, before you apply. Now, other wholesalers or people who take it, sometimes you'll say, well, let me take multiple applications on people. Wrong. This is what happens when you take multiple applications. And I have my competitors, they'll take applications, submit 4 applications on a guy. Well, that'll hurt you. Won't help you. But now I'm showing you how we help you. All right. So that's about that on the underwriting. That was situation one. Situation two, attorney called me yesterday. He was doing a will for the client. He got me on the phone, 75-year-old woman, and she had an annuity, a non-qualified annuity, which means it's not an IRA. It's outside an IRA, and whatever interest rate she's getting. I don't even know yet. And he says, how do I handle this? He says, my 50-year-old son is receiving government services. And right now, him and her sister are 50% beneficiaries of this annuity. I go, that's a problem. So what the woman wanted to do, and what the attorney almost said to her, but he's smart enough to ask me, my daughter's perfectly responsible. Why don't I have it all go in her name, and she'll take care of him, because we don't want to upset, the medical services he's getting from the government, special needs services. And it will knock him out of any kind of special services if he inherits that annuity. And the house, the same thing. So they were talking about a special needs trust, which I think they were setting up for the house. I said, well, the beneficiary has to be designated on the annuity to 50% has to go to a special needs trust. It's probably an addendum inside the special needs trust to accommodate it as the beneficiary. So that has to be done by paper on the annuity application in the beneficiary designation, regardless if you went to a good attorney or a bad attorney, or you just bought a product and didn't know that. So what would happen is you could cause two problems. One, you could knock them off medical services. And two, the alternative is, let me leave it all to my daughter. Well, let's talk about that. Two things could happen if she left it all to her daughter. Now, her daughter might be responsible and take care of her brother, and that's all well and good. I don't know if the daughter's married or not, but, let's say she is, or let's say she gets married, the daughter. Okay? And her husband, they run into some financial problems, and, the mortgage is late, and they got to find the money for the mortgage or the utilities. And they start dipping into this money. He's on government services. He doesn't know. So they start paying for those services, or, God forbid, her and her husband don't get along. They get divorced. He's entitled to half of her money, and the son is left out in the closet. This real bad problem. Just from that one little annuity could screw up their plans, and everybody can get angry after the fact. But guess what? That's why we do what we do. Okay. I asked her another question. 5 minutes on the phone, and I solved all these problems. It was amazing. Never met the woman. So, do you have a 401k or a pension? Oh, I have a pension. New York State pension. Oh, that's nice. Who's the beneficiary of the pension? Oh, by the way, you married? No, I'm divorced. Okay. Guess who the automatic beneficiary of her pension is? Her divorced husband. They never changed the beneficiary. Okay, now, a good estate attorney, trust attorney, will ask these questions and pick it up. A general attorney, which this one is, and he does estate planning, he does basic wills and stuff, doesn't necessarily ask all the right questions, or maybe he doesn't know this information was available to him until I asked it. So she has to change the beneficiary of her pension, and half of it has to go to her daughter if she wants to do it, and half has to go to special needs trust. These are little things that turn into giant elephant things with bad planning. So that's 2 calls I got from that one attorney, the one gentleman I mentioned before, the 40-year-old who I'm going to get him coverage this week, and I'm going to take care of their annuities. The last call I got was for actually 2 additional clients from another attorney whose father just died, who has some life policies, and they can't find them, and they don't know, so the attorney is going to hire me to find any old policies, which I can do. I have the wherewithal to find these things, and I've also been hired in the past year to get people the claims that they weren't able to get from an insurance company, usually resulting from somebody they took an electronic app from, bought some rinky-dink life insurance company who said, oh, they died too soon. Let me get the medical records now after they're dead and wait 4 years before I pay you the claim. That's what happens. That's why people get me involved, because I speak insurance. They speak legal. I speak insurance. They understand. I get things done in my world, and I speak the language that needs to be spoken. You've been listening to Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Love to have a conversation with you. Any of your insurance needs, please give me a call, no matter what. If you don't have a financial team put together, let me help put one together. You want to have the right people working on your stuff and get your stuff done right. Thank you. 631-647-4694, themainstreetcode.com. Have a great weekend, everybody. Thank you.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.